Good morning, all. A look now at WTI Crude Oil, part of the regular schedule of market analysis we do here at the Stop Hunter, hopefully to benefit you guys in your trading. Now, if you hadn't seen the news over the weekend, you can well imagine, if you have seen the news, you can well imagine that the Middle East, Israel, Palestine conflict certainly would impact the price of oil. And for those who haven't seen the news, when hopefully we can show you here what's happened to the price and where it could be heading next. So the underlying story, it's obvious. It's like I said, the Palestine Israel conflict. And you think, well, they're not too big in the oil producing world. Well, it's the knock-on effect of there in the Middle East as a whole. We still got the OPEC plus production cuts running through to the end of the year with Russia there as well. So this sort of event can, possibly lead to a big uprun in the price, and that would have impacts on inflation, and then that would knock into interest rates, and like the Fed would probably want to keep interest rates higher for longer. So you can see how the knock-on of such an event can, impact not just oil but other markets and drag in, a whole set of different variables that you've got to factor into the equation. So let's just have a look where the price has been this morning, and as you can see, we got on the left Friday's trading and then this morning's, and you can see that big gap up there on the open from $82.80 up to 85.45. So we're talking $3 there, and went even higher still, up to highs of 87.27, around about there. So you're talking about $5 of upside move there. We're raising a lot of the sell-off, well, a big part of the sell-off of last week's price action. And then what's happened? Well, we've had this, I suppose, pull back to where it opened at, and then we've just seen the last hour or so the price going back up again, hitting the pivot point around $86. So let's go through the usual analysis before we can draw any conclusions for where we think the price is heading off to next over the next week. Rig counts, a good proxy for the energy sector. The US line, like I say, I look at both negative, change from prior count and change from last year, so we're looking weak bearish there. Nothing to talk about in terms of inventories, no major outliers, and that's what I look forward to. Maybe boost a trend or reverse a trend. Nothing happening there. Forecast last week was 0.446 million, actual 2.224 million barrels. Look out for this week's October the 12th. That's 11 o'clock US time, and let's get into some charts. We've got here a combination of stuff going on. Down the bottom, seasonality, big impact on oil. And you do see just picking up, and then before heading off back to sort of a flattish, so up until mid-November, then off down further, and then picking up through into the new year. So no real changes there, so we'll call that neutral. The two lines above, large speculators, black line, large commercials, red line, part of commitment of traders data. And you can see the large commercials falling still, and the large speculators. And if we just drag that over a bit more, you can see actually just getting a bit shorter from previous weeks, which tallies in with the price action that we've seen. Now, that pull off from the sort of near $90, 91 sort of area, down to what has been that huge long range bound area that we'd seen for so long. So maybe this is the new support before the potential push up north. So watch for that break at, that's about $83 back into that zone. So other factors I look at, we've got the volatility index, the OVX, still looking volatile, picking up to about 36-37%. Still see they're still remaining to the upside above my moving average and outside the band. So to me, that's a good, well, we like volatility in anything, predictable volatility even better, but this one, often when I see the volatility rising, brings in a bit of bearishness to the price action. But when you have these fundamental outliers like we've seen at the weekend, the news from Israel and Palestine, then that can also drive the volatility upwards. So you have to be careful when you're using that as a indicator tool. Just use it as support. But like I said, at the moment, it's back to where we were sort of July time, into that sort of zone that it's sort of been holding for a while. Then we've got this basket that I put together of currencies that are related to the price of oil, and you can see there that it's been pushing on downwards, just stabilizing as that price has pushed back up this morning, looking a bit more neutral as it heads into this area here around that sort of zone. Again, it's just another tool that I use to help build up the bigger picture. So if we were to go back through that data from the rig count, through the commitment of traders data, seasonality, volatility, the currencies, we're sort of looking a sort of bit where we were start, a couple of weeks back. So we had what looked like a bearish situation building up in the price, but now said it's pulled back this morning of the conflict out there in the Middle East, and sort of erased that sentiment to bring it back to sort of a square one and start again. And with the fundamentalists out there, the factors there, you would probably factor in more bullishness to the upside, like I said, with OPEC plus and the wider implications of the conflict. So let's look at some longer term numbers. We've got a weekly chart here. Let's just draw on this regression band there, shorter term trend. Not a lot really changing here. I've changed the trend look from the 2 standard deviation regression. I wanted to see what was going on in the more recent term history, and you can see it's been trading nicely in between those 2 standard deviations, probably hugging more towards the lower end, middle of that for most of the time. We've had that run up in the price, hit the top again. Is it going to go further? Well, time will tell, but at the moment we're right around this 61.8% Fibonacci line, 83, just under $84. You want to get back to the mean of that channel, then it's back to about $69. Excuse me. And then down to the bottom where that point of control is, 38.2% at $54. So in terms of price action, we still got the longer term bullishness in play, but just starting to pull back, weaken off. In terms of the trend, you could probably draw a trend line down through there as well, and we'll be looking for that break on any further fundamental action to drive it on to say 105, and then those highs, so the high area there on that Fibonacci of $131, $132. But shorter term, maybe a bit of a pullback and a bounce, looking at that data there. So if you are into some short-term price action, the line break chart, we've got the 4-2 set up. And as you can see, if you wanted to get in, I'll be a bit more patient here to the downside. let that come back. We still don't know what's going on out there in the wider world, the bigger picture. So you've got this sort of range here, 86 down to 82. I'll be maybe looking to go short under 82 and long above that sort of level there, 86.5 maybe. That's the line break. Great one for spotting reversals and timing your way into potential trend moves there. Now into the Renko charts. Medium term price picture, $1 block size. You can see that was, we were up at $95 there before pulling back to the point of control around $80. And then we've seen this morning's price action pushing back upwards. Not a lot of volume in there, in that gap you can see there on the right, before getting back towards those highs. Maybe you've got to break that $89 area before pushing to 95. Downside wise, well, you've got to look at all this historical price action through there. It's looking quite strong area, between the point of control, $80, $84 in there. So, we've got to watch this price action carefully. Potential pullback zones, 76.5 maybe, then down to 65 there at the bottom over that range. And we're talking back to October 22. There's quite a good area of price action. Also looking at those highs at 95 where it got up to. Notice back there, it struggled to previously get above there in October and November of last year. So that'd be an interesting number to break the 95 area to try and get towards that $103. Now, if we focus in even shorter term, 25 cents block size for even more price action at the bottom there. We've got the stochastic looking bullish, DMI modified, just starting to cross over to bullish. Price pushing back up as we talked about earlier. See the point of control around $82.5. Weakness in the volume there. Could easily see the price get to the 88.5, 90 area once more. Like I said, we've had a few touches down there on the price at those lows, 81.65 sort of zone. Downside below that, the mid to late 70s, call it $78. But like I said, upsides, 88.5 to 90 in the shorter term. You get back to that 38.2% Fibonacci line at 90. You've got some price noise action as well, which might slow things down. Then you've got actually quite spiky volume in between that. So maybe expect some price jumps if it does continue on upwards to try and push towards that $95 once again. So it's quite hard to put together the story at the moment due to the crisis going on in the Middle East. The fundamental factors probably propping up the price at the moment. The stronger US dollar as well. Well, maybe holding back, because remember WTI priced in US dollars, maybe just holding back some of those gains a little bit as that gets stronger. So it's got the fundamental factors. This is where trading using technical analysis is tricky, but just follow your rule set, your plan, trade what you see, really. But at the moment, I would say it's got a feeling of weak bullishness as the situation over in the Middle East plays itself out. I'll be looking for any more pointers to where it's heading next. But like I said, it seems to have put itself back to square one after the recent sell-off in the price because of the weekend's events. So watch carefully which way it's going to move. Volatility picking up. So there could be some good price action, some scalping short-term trades for you to take there as well. So that's WTI. In about 45 minutes, I'm back again with a look at gold and silver. And then we round up Monday, 4 p.m. That's UK time, with a quick look at nat gas. So Thanks for joining me today for this look at WTI. I hope you enjoyed it. Give us the thumbs up if you did. Don't forget to subscribe and hit the notification buttons on the channel to receive future notification of content like this and much more that we produce on the channel. So good luck with that trading this week. Thanks for tuning in, and I hope to see you again soon.